guys, what is happening, and welcome to this video. So in today's video we're talking about how the economy is essentially a vicious circle, and this is a video not to really be missed because people who pray for these asset bubbles to continue, I just think anyway, they don't really understand the implications of what they're really praying for here. So before we get started, guys, please hit the like button. Please subscribe to the channel if you haven't already done so. I have a free email list that is available until we hit 1,000 subscribers. It's absolutely free, so get on that before we do. I'm also on Twitter, Instagram. You can reach me there. All the links are in the description. Okay, guys. So why is the economy a vicious circle? Well, essentially, guys, it's a vicious circle for a lot of different reasons. But the primary reason that it's a vicious circle is because essentially what you have is, if these asset bubbles continue, and already because of these asset bubbles, you have people paying much more to own a home, to rent a place. And that is just not a good thing fundamentally for the economy, because more money spent on housing or whatever it is, inflation for food, is less money going into the economy. It's less productive money that is flowing into the economy. So essentially, all these people praying that housing prices are going to continually rise and the bubbles are just going to go on forever are essentially praying for a recession, because that is exactly where we will end up sooner or later. Because it's like I say, it's a vicious circle. You can't get away from the fact that with these bubbles, eventually what's going to happen is you've got people paying so much for a place to live and everything else like food or whatever, and they don't have the money to spend on real goods and services into the economy. And that is exactly when you end up in a recession, because growth starts to slow down. Now, the funny thing is, guys, we were already heading there in 2019 because of the housing bubble. It was really starting to take its toll on the economy, and no place was that more evident than in Calgary, where we were. And Calgary was in a big recession, but the housing prices, they didn't really go down all that much. And the reason for that is lending was still very good. And the thing is, you're not going to get any significant crash in home prices until the lending really starts to kind of stop being so easy. Because the thing is, with any credit bubble, there is a lending scenario that goes with that. And with any credit bubble, that means that essentially the credit bubble is built on the fact that money is easy to get, money's easy to come by. So if money isn't easy to come by, well, guess what? It becomes more difficult to get that money. And it could be because of a stock market crash. It could be contagion from China. It could be one of many things. But what people fairly don't really understand, and they don't seem to get, and this is something George Gammon, who I met up with today, he hits to this on the head so well in his whiteboard videos. So I go check his channel out. I know a lot of you are already subscribed to him, and it was one of you guys that actually recommended George Gammon's channel to me about 3 or 4 months ago, and I just couldn't believe it, because we are on such similar mindsets that it's kind of unbelievable, especially when it comes to probabilities. But anyway, I'm getting a bit off topic here. But what he does well is, in his whiteboard videos, he shows how everything is linked together. How, like Evergrande, for example, could cause a GFC 2.0. And it's really interesting, guys, because we often forget credit is actually the reason why this bubble sustains itself. It doesn't matter if you're in the US, Canada, or Australia. The fact is, housing has gotten so expensive, you need credit to go get it. So if credit is really hard to come by, then that becomes a big problem. And people seem to forget about the GFC, and a lot of people in Canada, they didn't really experience the negative effects of the GFC, but countries like Spain, England, many countries around the world, not just the US, experienced the contagion from the GFC in the US. And basically, what you can kind of understand and you have to wrap your head around is during that time, banks didn't want to lend. They didn't want to give out the credit. And that was the real cause of these bubbles popping. It wasn't like people think that the prices just kind of started declining, snowballed, and then crashed. It didn't really happen like that. The GFC happened, and then basically you had banks tighten up their lending to a massive degree, because all of a sudden the risk premium for taking on a mortgage became much, much higher than it was pre-GFC. So the mortgage was much more risky than it had ever been in the past. So you had to pay that risk premium, be it interest rate, higher qualifications to get a mortgage, whatever it was. And me and Scott Walters were talking about this on the phone the other night at length. We were saying how back in the GFC, it was very difficult to get a loan. In fact, banks were doing everything they could. They didn't want to lend. They didn't want to actually take on mortgages. I mean, for an example, in England, we were looking to buy a rental property in around 2012. So you're talking 4 years, guys, after the GFC. They wanted 50% down payment because we didn't own a home. And then on top of that, they also wanted somebody who owned their home to sign on as a guarantor. Now, the thing is, that is very, very high level, 50% down, needing somebody as a guarantor. And the bank just didn't want to take on the risk. They just didn't want to take on your mortgage. So if we get to this point where there is a credit crisis, then you have to understand what that actually means. And what that means is lending is going to be a lot tougher than it is right now. And we are going to get there one day, guys. It happens. These cycles come and go. They've happened in Canada. It's happened everywhere in the world. So you can't just say, oh, Luke, it's never going to happen in Canada. Canada's banking system is absolutely amazing. It's happened in Canada before, in the late 80s. There was a bank that went bankrupt in Canada, quite a big one as well. So the thing is, to say these aren't going to happen is just kind of very naive. But you have to realize how these things are kind of intertwined, because credit is really what sustains this bubble. So if credit becomes more expensive through interest rates, if there's a credit crisis or a liquidity crisis, then you have to realize what that means. And likewise, if for whatever reason mortgages are seen as a risky product, then you bet your bottom dollar that they're going to attach more risk if you want to get a mortgage, and mortgage lending is going to become much stricter. And the thing is, things like the CMHC, which allow people to put less than 20% down, those places during a financial crisis, they wouldn't even issue new loans. So the thing is, we know for a fact that you're going to be putting minimum 20% down. And you can even see, you can go online, and if you look at the interest rate for a insured mortgage in Canada or an insured mortgage in the US or wherever, it's less than an uninsured one, because they actually want you to take out the insured one because there's less risk for them. So the thing is, guys, that just kind of shows you the risk premium. Obviously, there's not much difference right now, but trust me, when things get sticky, especially when it comes to mortgages, it doesn't matter what the central bank does. They lowered interest rates to the floor in the US, in the UK after the GFC. They did quantitative easing. None of them ever work, and it will be the same situation from 2020, guys. But anyway, I hope you got something from this video. I hope it was helpful in some way or another. If you haven't done so already, guys, please like the video, please subscribe to the channel, also sign up to that email list before it's gone. And from here in Phoenix, Arizona, I will see you in the next video, guys. Peace and love, guys. Bye.